Welcome to the Unexpected Podcast. This is Justin Mahwikizi, and today's guest is someone that I've known for a very long time and a great person in general, but with a great experience in the mortgage industry and the housing industry in the United States. Brandon Levy, thank you for being here. Welcome.
Thank you, Justin. Appreciate you having me on.
Before we begin, tell our viewers where you are and what kind of temperature you got going in Houston.
Well, it's Houston, Texas. I've been here for the last decade. Currently, the temperature today is probably somewhere in the upper mid 80s. So pretty nice and just raining. Beautiful weather.
For a guy living in Chicago, what's that?
Said a little liquid sunshine.
For a guy living in Chicago, I envy all that. So well done. So Brandon, tell us, before we talk about mortgages, what was the first home you remember growing up in, and what made it feel like home?
Well, it would have been 1916 North Mohawk, 60614 in Chicago, Illinois. It was a beautiful townhouse that was part of a larger attached community, so similar to a row home, gated. I would say the community that was in
Brandon?
It made an amazing opportunity, amazing environment.
Sorry, my friend, you cut off when you said the what made the home great, and then you just cut off for like 10 seconds.
Sure. No, I apologize. The power just went out, so I'm just completely on the cell phone at this point.
No worries. Go ahead.
Got a big storm going on outside, but as I was saying, just having that overall community in that gated townhome community right there was outstanding. Really was a sense of family and benefits to all and above.
That's great. That's great. You've spent decades helping people finance their homes. What have your clients taught you about people, and that has surprised you over your career?
I don't know if there would be so much a situation of surprise. I kind of feel like it's very rare for someone to actually throw me something I haven't seen at this point. But it's after you've been doing it for almost 21 years, you just kind of ebb and flow through it every time. It just every day is just kind of I don't want to say every day is kind of the same. Just if it's not something that, more than likely, it's not something I've never seen before. It's very rare that I'll get something I'm like, well, I never saw that. So it's kind of just like with I imagine with every career that you work in, the longer you do it, it just goes like water rolling off your back.
Speaking of that, you started doing mortgages and housing deals back when you were in college, right?
Correct.
What was the impetus for you to pursue that? Because I think it was prescient for a college kid to find a way to make money. What drew you into that industry, and what got you started that early?
Well, it was actually kind of a funny story. I was at Cal State Fullerton doing undergrad, and a brother of ours ended up his older brother ended up was working in the mortgage industry in Southern California, and we went out for drinks one night, and he said, "Hey, do you want a job?" And I said, "Yep." And there it was. I took this job originally thinking I'd just make some good cash and be able to go out on a lot of dates and have a lot of fun, and ended up being a career.
Wow, amazing. Where did you study at Caltech?
At Cal State Fullerton, I was doing communications and history, double major.
Got it. Is there something that homeownership that the wealthy families understand instinctively, but many working families never got taught? Is there a knowledge gap between the wealthy family side on the housing side versus working families going into housing?
I don't think it's so much the knowledge gap. I see, unfortunately, numbskulls, for lack of better terms, on both sides of the coin on that one.
Yeah.
I think it's just a matter of, who's coaching you up. I try to generally bring a lot of benefit to my clients by putting them in the best position, getting them as much knowledge as I can during the course of the transaction. But there are a lot of other loan officers, specifically at big box retailers or big box correspondent or banks, that it's a 9 to 5 operation for them. They don't necessarily really care.
Gotcha. And you have the unique experience of having done mortgages before 2008 at the height of the market, during the crisis, during the foreclosure and kind of short sale period, and now we're in a high interest environment. Can you contrast that for our audience, your experience and what you remember about those periods?
I would say that all of those aspects corresponded to different points in my life in changing aspects. When I was in the '08 or prior to '08 situation, I was also in my early mid 20s. That was a very exciting point in my life of being a little bit more wild and crazy. Then when '08 happened, kind of still going through that portion of my life, but obviously had to temper that down just with the entire market collapsing and going from writing, 10 plus deals a month, going and writing a handful of them. Then you had the HARP situation that came in, and that was beneficial for all of us for being able to refi, at least help with lowering the rates on people that, currently were in a tough win situation and their values that completely dropped their house. Followed by the Obama years, which were very challenging to say the least. When we got into Trump's first term, it was amazing. Some of the best earning years of my life. And through Biden and the skyrocketing of interest rates to almost 2.5% increase,
Right.
2x in the matter of a 2 year, 3 year period. So that completely capsizes and kills most people's businesses. And now we're back into a pretty progressive lending environment. So it's been very beneficial, and I've changed my life at every one of those stages.
Yeah, yeah, I bet. Today's youngsters, they're a little more pessimistic about the American dream and the home being as part of the American dream. What would you say to a 25-year-old who would say the American dream is dead? How would you respond to that from your perspective?
I don't think that the American dream is ever dead. I see it more as a situation of nothing is going to be given to you in this country, but everything that you want, you can have as long as you're prepared to pay the price and work for it. So when I see somebody that's coming up, I don't sit there and say, poor you. I say, hey, let me give you an opportunity to try to teach you something, but you have to find that fight inside of you to want to succeed and make it something great for you and your family. I can't give it to you. If I
Excellent.
try, yeah, if we try to give it to someone, they don't expect it. They don't know what to do with it.
Absolutely. What is the conversation you have with people coming in? Because I'm hearing from friends and some family where they're buying homes today, but they're still doing the ARM deals, waiting for the interest rates to go down versus a fixed rate. How do you approach that and when you're counseling a potential borrower on which path is best for them, but or maybe it's their decision on how they want to proceed?
Well, I don't think there's ever a bad time for buying, and obviously there's no better time for buying than currently, just for the reason being that unfortunately we're in a cyclical environment when it comes to rates. Gradually, as the rates come down, you're going to see those property prices going back up. You might as well just buy a house at 400,000 or 500,000 right now, and then turn around and drop that interest rate somewhere here in the near future when it might be 600,000, rather than wait till you get that amazing 4 or 5% interest rate and pay 100 grand more for it.
True.
As far as it goes for the difference between arms and just your standard fixed year products or any of the non QM, I think that would be case by case basis based off of what the client's needs are for that time and what best benefits them and their families best.
Okay. Um, is there, what do you think is the current biggest myth first time home buyers believe in 2020, 26? What myths do you have to kind of dissuade them?
That it's unaffordable to be able to get into a home, that there's not programs that are out there to be able to allow for first time home buyers and or reasonable down payments. Often people think that in order to be able to buy a house, you do need 20% down, and that is a fallacy. But everyone's credit is different and everyone's situation is different. So it really determines what that looks like. That's why I recommend you should always use a professional, someone who's seasoned, someone that's local, that can guide you in the right path.
What do you say to those that had a harder time during the COVID years? The restrictions, especially up in Illinois, was just everything was shut down, and so their credit file is not optimal, or at least it still has that history during those years. How do they surmount it? How do they? Is there solutions for folks that went through that period and are trying to become home buyers, but know that there's a stain on their credit file because of those years?
Well, I would have to say that there are some good programs out there for DC debt consolidation if they need that. There's also other programs that they can do for some credit monitoring, well, not monitoring, credit restructuring. Should I say. So there are opportunities and resources for those borrowers to get engaged with. Really, the most important thing for me is to take that initial application so I can kind of see and identify what the problems that I'm looking at, and then I can best assess as to, hey, you need to speak to this person, or, this is what I would recommend you would do. Without seeing that, I hate to say it's so cliche, but it's kind of like calling your mechanic and telling him, hey, this is, the car's making this sound. And you say, oh, that's great. Why don't you bring it in so I can take a look under the hood?
That's right. That's right. Well, I think it's a good question. It's a good answer for our audience, for those folks that went through it, rather than not even start the process. It's important to start the process with someone local and a professional, so at least they know this is what's happening and this is how you get to where you need to be. Does that make sense?
Correct.
Renting versus buying. What is the mindset that makes sense for either, versus the possibilities of home ownership in America today?
I personally always like to lean, not necessarily because that benefits me financially, but it does. But I like to look at home ownership as the situation of you're putting yourself in a position where you'll have something of equity and value in your own life, something that you can truly appreciate it because it is something that you've taken the hard work to be able to obtain, and you're actually applying your resources towards making it better because it's your investment, as opposed to renting where it's 2,000+% interest. You're burning someone else's mortgage for them. It's better off just to throw essentially your money in your own savings account.
Right. And as far as uh, uh, fixing houses, not fixing houses, but upgrading their houses, putting additions, how does that translate into a net nominal increase in the house price? Should they talk to a professional before they even start putting repairs in to make sure that the valuation of the house will indeed increase? Because I know some folks that have put in some work, only to find out nominally the appraisal didn't really budge a lot.
I would say that any time with dealing with upgrades, you really want to base that and tailor that off of what actually meets your family's needs. You shouldn't be looking at putting in surround sound systems or gas fireplaces as being the be all end all and pumping your value. Really, it's more of a market analysis. So you want to be ideally somewhere within maybe 3 to 5%, possibly even 10%, depending on the area of community you're living in, of your other neighbors. So you could have the nicest house in the block, but it still means it's worth 500,000.
Wow. Okay. Who should they talk to before they make that decision? They should an appraiser itself and try to understand what their community looks like and what any investment towards that route would produce.
I think it might be best to actually just have a quick conversation with the realtor that they ended up purchasing said residence with. They
Okay.
can do a competitive market analysis, a CMA, just to figure out what the median prices is for properties of their similar character in the area. And it gives them an opportunity then to figure out, hey, well, this is what I would feel comfortable spending and putting into the system.
Gotcha. What do you think of the interest rate environment right now, in the near term or medium term? What is the Fed going to do, and what do we see going into Labor Day and closing the year out?
Well, we do have that new Fed chairman in. I know he had spoken previously of quantitative easing, so I'm interested to see his procedures and how he's going to unravel and unroll that here in the system and what that's going to do. I have high hopes for him, but we really don't have a track record, unfortunately, to go off of. So I'm not sure I can answer specifically what I think he's going to do, just because we don't know what he's ever done.
Yeah.
Obviously, his first time ever being involved in this type of
Um, yeah, he's going to have a hard job with Powell still in the board of governors. So you have the
correct.
past boss still there. So it's going to be interesting to watch. Any advice you have for maybe first time home buyers that already bought a starter home, but they're thinking of going to the next step? How should they approach it from approaching the loan officer? Start a conversation.
Or just chat with whoever they feel comfortable with, just to try to gauge and understand what their income and what their financial needs might be for that new property. And that would be what I would end up doing. I think that that's the most effective route of being able to take it. Talk to a licensed professional.
Gotcha. Do you, during 2008, 2009, were you still bringing in new home buyers or were you working on foreclosed properties? There was a bit where you were helping in that section, no?
I was. I briefly went and worked for Aquim Financial for about a year and a half, taking over foreclosed properties in the greater Pennsylvania, New Jersey, and that tri-state area right there.
Okay.
It was a very interesting scenario. I wouldn't recommend to anyone ever again, but I'm glad to say that I had the opportunity to be able to do something like that. It was just a little intimidating, let's just say. You go into some of those areas and you're thinking, hey, like for instance, I took over a property one time in Capitol Heights in the greater Washington, D.C. area. And the only time I'm sitting there thinking, hey, Capitol Heights, this must be where the senators and congressmen live. And if you've ever been to the D.C. area, you go to Capitol Heights, you're like, I don't know if I want to get out of my car. If I do get out of my car, it may not be here when I get back.
Right.
So you're really putting yourself in a very dangerous environment. So I remember they wanted me to go and take a role with them over in Detroit, and I told them, no harms, no, thank you.
No, that's fair. That's fair. What do you hope families you've helped say the families you've helped, what do you hope they would say about you?
He was an honest, hardworking individual, and we appreciate all the help that he was able to bring to us and our family in our hours of need.
Outstanding. Do you stay in touch with some of the families you helped long term? Do they come back?
I do.
Again?
I frequently get conversations to show that they truly appreciate me. They often will call and refer me additional business or come back for refinances. It's very rare that I come in contact with somebody that I want to completely cut off and never speak to ever again.
That's great.
But it does happen.
Well, yeah, there's always one of you, right? How do you source clients and what's your sales cycle like in your world?
I'm 100% referral at this point. I have a whole bunch of realtors that just send me all their business as it comes in. My sales cycle, are you referring to how long it takes me generally to close from start to finish?
Yeah.
I try to get my stuff done in less than 30 days from everything, from taking applications, being done, hopefully writing an offer. But obviously it's 100% dependent on the client finding the right home, but I can move as fast as they can move.
Great. And what would you say to loan officers who are just getting started and are trying to develop a book of business and refer a network? Is it invest in the communities they live in, be part of the associations? How did you build your relationship with realtors and other sources?
100 dials a day.
Ha!
100. As simple as that sounds.
Still works.
Take out your phone book, your old yellow pages or your white pages, whatever you want. Google, call 100 new realtors every day. And if you do that for a year, I guarantee you will have so much business you don't know what to do. I have a guy that I worked with 10 years ago. He was a teacher. He had never had a sales job ever in his entire life.
Okay.
He came in and he heard that rule, $100 a day, and he did it. His first year in the business, never having had a sales job, did about 80,000.
Wow.
Second year, doubled that, and then kept going. Now I think he's top 1% in the nation.
Well done. Outstanding.
Cranks. Yep.
Outstanding. And my son is almost in a couple of years going to be going to college. And one of the first thing I want to tell him is like, hey, look about getting your license as a loan officer. What is that process like for folks who are interested in going to be in your footsteps?
The course itself, if you do the in-person, you can knock it out in a solid weekend, followed by additional testing per whichever state you're looking to obtain your license in. If you pass your testing, it's not bad. Then you just have to go find an employer, someone that's going to go sponsor you. Generally, it's a lot more tricky getting into the business as a greenhorn, just for the reason being you may end up having to go work at like just your traditional bank just for a little bit while you get your footing in the door, or you're going to have to probably know somebody that might be able to refer you into another correspondent role or something along those lines. Most broker shops aren't looking to hire newbies.
Oh, I see. Okay. So you got to pay your dues. Old school.
Of course. That's
Okay.
right.
If any of the folks listening to us are based in the Houston area and they're interested in having a conversation with you, how do they reach out to you or your company?
Best way to reach me is via my cell phone, which is 847 area code 858-4378. And you can reach me here 7 days a week.
Outstanding. We'll make sure we mention it if you don't mind, and hopefully this conversation results into more than 100 calls a day one day, huh?
It wouldn't be so bad. I'm just gonna keep it going. I actually just lined up a new account I've been working on for the better part of about 5 or 6 years. They told me I'm their guy finally, and they're really starting to send me a lot of turns. It's very nice.
Very good. Congratulations, Brandon.
Thank you.
Proud of you, my friend. Thank you
I
for
appreciate it, brother.